Our next guest owns restaurant brands from fine to casual dining across 38 states. He joins us right now to talk inflation pressure, wages, and what he's seeing from consumers. Josh Kern is the CEO of SPB Hospitality. And Josh, we should point out it's about 550 restaurants across 38 states. So you've got a really good idea of what's happening with the American consumer right now. How is business?
Absolutely. Thanks for having me on, Becky. No, it's a mixed bag for sure. It's really, it's always difficult to operate restaurants, and certainly when you're talking about going from a QSR all the way to upscale, just lots of things going on out there. But particularly that inflation and just the cost of goods, it's again elevated this year on top of last year. So last year roughly about 12% on the cost of goods, and another 5% this year. So it certainly is a challenge each and every day.
Where do you see the biggest inflationary pressures? Because we talk about it on a national level all the time as if we've kind of defeated inflation. That seems to be the view from people who are watching from the Federal Reserve's perspective on things. Where are you getting hit hardest?
It really falls kind of in the kind of beef segment, in those proteins, and it's impacted by a variety of things. The herd is really thin kind of this year versus last year. We've got a lot of kind of disruptions to supply chain. So, the storms that we've seen certainly in Florida, impacts, those delivery costs, what we're getting in the back of the restaurants themselves. So it just is everywhere. We even see kind of our liquor mix, kind of see behind me, it's elevated this year. And so we feel it on all sides for sure.
What do you mean when you say your liquor mix is elevated?
Yeah, I mean, we just see the costs going up. So wine costs, pass through are up about 10% this year versus last year. And so, you got to figure out, how can we pass that along to the consumer? And especially in a value pressure market, it's tough for us to kind of, to really look at what we're going to do from that cost perspective, particularly in liquor, beer, wine. So it's new for us this year to see those elevated costs in a high margin side of the business. So it's something that's, a tricky slope for us.
So obviously you've got your hands full with all of the decisions you have to make on a daily basis to run your business. What do you think about when we start talking about the Federal Reserve, what they're going to do next? What do lower interest rates mean for you?
Yeah, I mean, it's in all things. It can allow us to open new restaurants. There's a little bit more cash flow available in order to expand, some of our concepts that are doing better than others. And so that frees up some capital on that front. It also allows our consumers, our guests to spend a little bit more. So, we've seen a pullback, certainly when it comes to, fewer appetizers sold, desserts kind of go down, liquor mix goes down a little bit. So there's just not a lot of confidence that our guests see. And so they still come into the restaurants. We still see traffic coming in, but they pull back in different areas. And obviously, as we're trying to maximize our guest check as much as possible, it's really tough on guests coming in when they really want to, they want to have a good night out in the town, but they just can't go, their dollar just doesn't go as far as it did once before. And so that puts a lot of pressure on us each and every day.
Yeah, I mean, it seems like as much as we talk about a great economy, it is being caught a little bit where you're looking at guests who are feeling a little more cautious than they used to be. Consumers may be spending a little less freely than they used to. So you don't want to see the economy suffer, but you also want to make sure that inflation doesn't get out of control again.
Absolutely. And it hits us on all sides. Like I mentioned, cost of goods, we get the labor factor in. We're in so many different states that, we have to constantly evaluate, what the wages are in each state. It's different in the QSR, Crystal side of the business than it is in J. Alexander's. In terms of the type of guest that comes in as well. So, we see a little bit of increased sales on the QSR, on the value side of things. Crystal is a brand that's been around for, 90 plus years. And certainly when the economy is kind of a little bit dicey, we do see a spike of sales on that side of the business. And then the upscale kind of does the reverse. So we'll pull back just slightly. Although we've been really insulated on our J. Alexander and Stony River concept. So we've weathered the storm. We're outperforming, the category in that regard. So, cautiously optimistic that if we can get through this election and people are a little bit more focused, just to get past that date, that we'll see an increase as we move forward.